Hey traders, welcome to Forex Market Overview. My name is Mark Owen from Trade and Train, and we're looking at the dollar index, and this is the weekly chart. And basically, it's the second trading day of July. Seasonality is one of our key components, I should say, to our trading. And it's one of the conditions that has to be met for some mid-term to longer term moves. And traditionally, we see a seasonal bear period for the dollar index throughout July. A couple of other interesting facts for July is that it's New Zealand's biggest performing month on average. So expect to see bullish moves from Kiwi once technicals set up, and potentially we're seeing technicals now aligning with our seasonal bias and commitment of traders shorts on the dollar index. So let's take a look at price action closely. So what have we seen on the weekly chart? Well, we've seen the 95 level tested a couple of times. The weekly wicks, we can see long wicks pushing through 95 and then coming back down. If you were to just look at the daily chart, what you'd see is a close above the 95 on one of these levels here. You can see here that we see a close above 95, but then a rejection forming a double top. Now the question is, are we going to break below this low here and continue to head down and see the dollar index seasonal chart play out, which would essentially see the dollar index fall into about 91.50 area, potentially even as low as 90.5. So that little zone there would be a key place to be exiting any sort of dollar shorts or looking for dollar longs. So how can we look at trading opportunities on the back of this information? Well, quite simple really. We correlate this information with the euro, with dollar yen, gold, and also we'll look at Kiwi. So chart of focus right now, we're going to look at the dollar yen, and I'm going to bring alongside that a chart of gold. So what I want you to look at is the correlation between these two markets. We'll bring up the weekly chart on both and bring in the same sort of time period. Let's move this one across, bring in the data, make it so it's visible. Okay, so we can pretty much see everything right now. So what I want you to pay close attention on are, if we look at the gold chart on the right hand side, these two lows down here, and then if you look at the same chart, but so if you look at the other chart, dollar yen, up in the top left hand corner where the two red arrows are, you'll see that the dollar yen chart has produced lower highs, therefore the yen has got stronger against the dollar. But at this same point down here on the gold chart, you'll see that gold has got weaker, so therefore we're seeing yen leading gold in terms of the safe haven. And if you look at the way the market moves, this major structure point here lines up with that red arrow. If we come over to this turning point here, you'll see that's gold at 1367 and the yen down at 100, this point over here. We look down here, we see 118, and that's 118 on yen and 1,123 on gold. You can see I've highlighted these prices, and each one you'll see the market turning at key significant areas. So why is it so important right now? Well, you see where price currently is. It's sat on this long-term ascending trend line on gold, and if we look at the yen chart, it's sat on the long-term descending trend line here. So two trades, which one you want to trade will obviously go to personal preference or your risk parameters. So let's start off with the yen and have a look at trading opportunities here. So for those of you that are members of our live traders club, you will already be in this market. We had a limit order short at 111. We got filled last night, and we'll be looking to add into this position. We'll be looking to run it down towards the 105s, but now we've got to let this market run and hopefully see the seasonal period play out. We'll be looking around 109.50s as first take profits. We'll obviously see 108.50 as another significant area, but you can see here where the market rejected long wicks and then open and closing prices here. So 108.80 will be another significant area. We'll break and close below 108.40 and we should see 105 tested. So lots to look out for here on dollar yen. So let's look at the correlated market, which is gold. Now we did take one trade on this earlier last week, which we got stopped out on. We were long from 1250, preempting the move that we were going to see a rejection of this level here. Now we may still see a rejection of that level, but we tried to catch the market as it was falling. This was a reduced risk trade in our club, but you know, for non-members we like to be open and transparent, and it was a losing trade. We did, however, place a trade live this morning. We went long at 1243, just through here. So you'll find it was probably just 1242.50, just above the break of these highs here, and that was our rejection. And now the way we can look at trading this market will be, we'll be looking to add into this one. So things that we're seeing are this potential pattern setting up. So we'll be looking for an opportunity maybe to add back in on the next higher low, and then we'll be looking at around 1255, this neckline area, to take another potential trade and run this up. First take profits out at 1300, and then extended targets up to 1360, which is all the way up here. Well, in fact here 1350 will be extended targets. So that's a clear insight into what we're doing with the dollar yen and to gold. Now I'm just going to fast forward a little bit and take a look at what's happening on the Kiwi. So Kiwi, let's just zoom out to the weekly chart. What we'll see is major structure through here. We've seen a fib extension, 1.272 overlapping at the big number 6700. We have a commitment of traders extreme long. We've got seasonal bias long. So we're just looking ways in to trade this chart based on technicals, and now that our conditions have been met. So simple answer was we had a limit order at 6700, so we were long from 6700. This went over 1% up, so the traders within our group or community that like to be risk-free are already risk-free this trade. Essentially now what you'd be looking for is a break of the CTL and then a pull back into sort of the top of this little range here, about 67.20, to get long. Next sort of key level to watch out for, barrier, will be that 68.20. And then one final chart that we're going to look at today is sterling. So let's jump up to, or cable I should say, weekly chart. You're seeing lots of long wicks down here. Seasonality remains strong for cable, or I should say for pound, and also we've got weakness on the seasonality front for dollar. So expect to see rallies potentially forming another lower high into around 136.80. So we'll be looking for longs. If we can get a retest of 130.50, 130, then that'll be a great trading opportunity. If not, then it's looking for that change in cyclical pattern. So you know, we want to start looking for your CTL breaks. We can see clear TL here, potentially a higher low, but let's see if we can get a higher high. We'll wait for that confirmation, and then we'll be looking to get long stops underneath here, target right the way up into that 136.80, and that runs alongside plenty of confluences. So that's it, short and sweet, but plenty of charts and lots of trading opportunities for you to take advantage of there. If you like the information that we've just presented to you, the best way to let us know that is just hit like, share and subscribe. If you'd be interested in attending an open evening here in London where you can meet some of our current members, please drop an email to mark@tradeandtrain.com with your full name, contact details, and one of the team will be in contact with you regarding location and dates. Okay guys, have a great day, stay disciplined, and we'll be in touch shortly.